All right, so let's dive into crypto. It's fascinating, but kind of wild, right? I mean, you probably already know some stuff about crypto. Maybe you've even messed around with it a bit. But today we're going deep. We're gonna uncover the hidden mechanics, the stuff that even like seasoned investors might not know. Think of it like peeking behind the curtain at the crypto casino. And to help us with this, we got some insights from Dr. Pooyan Ghamari. He's a Swiss economist who really knows his stuff when it comes to finance. He's got this article that breaks down how crypto markets actually work. And spoiler alert, it's not always what it seems. So our mission today is to figure out who's really calling the shots in this game. We'll be talking about the power dynamics, the potential pitfalls, and things you really need to watch out for if you're thinking about, getting into crypto. Dr. Gamori starts off by talking about decentralization, which is like the whole point of crypto, right? He even quotes someone saying Bitcoin was supposed to be this revolutionary system, free from, big banks and institutions controlling everything.
Yeah, it is interesting, isn't it? I mean, the blockchain, the technology behind Bitcoin, is meant to be decentralized. But the way we actually buy and sell crypto, it's become surprisingly centralized.
Oh, okay, so it's not as free and open as, we're led to believe. What does that mean for everyday investors like myself?
That's a great question. See, the blockchain is like this vast open sea, right? But to get on that sea, you need a port. And those ports, those are the centralized exchanges. They control the flow, they set the rules, and they definitely take their cut.
So if these exchanges are the new gatekeepers,
hmm
how much power do they actually have? I mean, could they be influencing prices or even manipulating the market?
Well, let's start by understanding how exchanges make money. They make money whether the market's going up or down, every trade, every withdrawal, every transaction. It generates fees for them. So their incentive is to keep things moving, keep the
Now,
volume high, regardless of the price.
that makes sense from a business perspective. But Dr. Gamari also talks about some more subtle tactics that exchanges might use. He mentions things like adjusting margin requirements and creating liquidity crunches. Can you break those down for us?
Absolutely. Imagine a casino for a second. You're playing roulette, and suddenly the casino decides to just change the payout odds. Or maybe they subtly nudge you towards a slot machine, one where the house edge is higher. That's kind of what's happening with these exchange tactics. Margin requirements, for example. They dictate how much borrowed money a trader can use to amplify their bets. If an exchange suddenly lowers those requirements, it can create a surge of buying power, potentially inflating prices.
So it's like they're giving everyone free chips, encouraging them to bet bigger, but ultimately increasing the risk.
Exactly. And then you have liquidity crunches. Liquidity refers to how easily you can buy or sell an asset without, affecting the price. An exchange can kind of tighten the tap on liquidity, making it harder to buy or sell, which can lead to some crazy price swings.
It's starting to feel like the house always wins, even if it's not always clear how. Now, on top of all this, we've got these mysterious figures called whales swimming around in the crypto world. Who are these whales? And how do they fit into all of this?
Think of whales as the high rollers in this crypto casino. They hold massive amounts of Bitcoin, enough to really make waves with their trades. We're talking early adopters, institutions, hedge funds, even some of the people who are mining Bitcoin back when it was like nothing.
So they're like the VIPs, the ones getting the special treatment, the high-stakes tables.
Yeah, in a way, their actions can have a huge impact on the market. Like, if a whale decides to sell a big chunk of their Bitcoin, it can trigger a cascade of selling, pushing the price down. But on the other hand, if they start buying like crazy, it can create a frenzy, pushing the price up.
That makes sense. But if they have that much power, couldn't they manipulate the market? Dr. Gamari talks about this thing called pump and dump. How does that work?
Okay, so imagine a whale starts quietly buying up a lot of a specific cryptocurrency. As they buy more, the price starts to rise. People see this and they think, hey, I got to get in on this before I miss out. This is where FOMO comes in, fear of missing out. It's a huge driver in the crypto world. As more people jump in, the price goes up even higher, fueled by, speculation and hype.
And then the whale, seeing the price way up, just dumps all their holdings, making a huge profit while everyone else is left holding the bag.
Exactly. They create this artificial bubble, inflate the price, and then cash out at the peak, leaving everyone else, well.
That seems really unfair,
Yeah.
especially for smaller investors who don't even know what's happening, hearing all this. It's making me think that this whole crypto market is just a giant Ponzi scheme.
Now, hold on. Let's be careful with that word. Dr. Ghamari is very clear that not all crypto projects are Ponzi schemes. There are many legitimate projects with real-world applications and value.
Okay, that's good to hear. But I'm still kind of struggling with how volatile the market is. It's so unpredictable. You look at the price charts, and it's like a roller coaster. Dr. Ghamari even suggests that some of this volatility could be, like, orchestrated. Is that even possible?
It's definitely something to think about. Remember, we're dealing with a market where anonymity is key. It's hard to track who's buying and selling, who's holding large amounts of crypto, and who might be coordinating their actions. So yeah, it's possible that those random price fluctuations could actually be coordinated actions by whales, maybe even working with certain exchanges.
Okay, so let's say that's happening. How would they actually manipulate the market?
Well, there are a few tactics they could use. One is called order book manipulation. The order book is basically a list of all the buy and sell orders for a crypto at a certain time. Whales can place huge buy or sell orders that they don't actually plan to execute. These are called spoofing orders. And they create this false impression of demand or supply, influencing the price.
So it's like they're bluffing, trying to scare other traders into buying or selling.
Exactly. They're playing mind games with the market, using their size and anonymity to their advantage.
This is getting pretty intense. So if these whales and exchanges have so much power, what does that mean for the average investor? Are we just lambs to the slaughter?
It's true that retail investors are at a disadvantage. They don't have the resources, the information, the tools that the big players have. It's a different game with different rules.
So what can we do to protect ourselves? Are we just stuck?
Well, knowledge is power. Dr. Ghamari emphasizes education, understanding the risks, not falling for hype.
So do your research, don't invest more than you can afford to lose, and don't believe everything you read online.
Exactly. There are also practical things you can do to manage risk, like you can set stop-loss orders. Those automatically sell your holdings if the price drops below a certain point.
So it's about having a safety net, a plan for when things go bad.
Right. You can't control the market, but you can control how much you're willing to risk.
Okay, that makes sense. But what about the big players? The hedge funds, the institutions, are they immune to this? Or can they get caught off guard too?
Even the most sophisticated players can be caught off guard by, coordinated whale moves or sudden market shifts. They might have more resources and better data, but they're still playing in the same volatile market.
So no one is really safe in this crypto casino. But if the system seems so rigged, is there any hope for more fairness, more transparency? What about regulation? Could that help?
That's the question governments around the world are trying to figure out. How do you regulate a decentralized system, one that was designed to operate outside of, traditional finance? It's a tough balance. Too much regulation could stifle innovation, drive projects underground, but too little regulation, and it's back to the Wild West.
So finding that balance is going to be key. What about self-regulation? Could the crypto community police itself? Is that even, realistic?
There's been some talk about that. Some people in the industry have suggested, creating self-regulatory organizations, setting stricter standards for exchanges, maybe even requiring more transparency from those whales.
That sounds good in theory. But if these whales and exchanges are making money from this lack of transparency, are they really going to give that up?
That's the million-dollar question, isn't it? If manipulating the market is so profitable, it's hard to imagine them suddenly embracing transparency, just for fairness, It's like asking the casino to lower the house edge on all their games.
Yeah, I don't see that happening.
Yeah.
It feels like we've uncovered a lot of uncomfortable truths about this crypto casino. So for our listeners who are just starting to explore this world, what are the key takeaways? What should they keep in mind?
I think the most important thing is to remember that knowledge is power. Don't just blindly follow the hype. Take the time to understand the technology, the risks, the potential downsides. And remember, this is a volatile market. Don't invest more than you can afford to lose.
So do your research, be careful, and maybe have some antacids ready for those price swings.
Exactly. And keep in mind, even in this supposedly decentralized world, there are still powerful players, pulling the strings. Don't underestimate the influence of those exchanges and whales. They have a huge impact on this market.
Okay, so be aware, be informed, and be a little skeptical. Anything else?
Just one final thought. If so much power in this system, a system that's supposed to be decentralized, lies in the hands of just a few, what does that mean for the future of crypto? Can it ever be truly decentralized? Or will it always be a game where the house has the edge?
Those are some really interesting questions. I guess we'll have to wait and see how it all plays out. It's definitely going to be a wild ride. Thanks for joining us on this deep dive. It's been pretty eye-opening. And to our listeners, remember, whether you're venturing into crypto or any other casino out there, always play smart, know the rules, and hey, maybe bring a friend who's good at counting cards.